is there a missed opportunity for investors, or was this a necessary reset?
Real estate is, decade trading. It's not day trading.
When the cash flow works, it will always be a good investment, no matter what the market is, no matter when it is.
If you treat it as an investment, I think it's a golden opportunity.
Hi, everyone. We are back for another episode of Signature Insights, our Royal LePage Signature podcast. And today we have the three biggest or largest pre-construction producers within our brokerage and maybe even within the industry. So we're very lucky to have them with us today. We're going to be talking all things pre-constructions, where we were, where we are, and where we're going. So we're very thankful to have Emil Vojkollari here with us today, Sehr Mahmood, and Norman Zhu. Thank you. Great being here. Thank you all for your time today. As you can tell, I'm really excited to have you all here. And we're just going to get right to it and dive right into some great questions that I'm sure everybody's wanting to hear what you have to say all about. To start things off, before we really dive into it, I want to take a step back. So what are the key factors that got us here when things started really cooking along? And Emil, we'll just kind of work our way over.
Sure.
What did you see that really kind of kicked things off that got us to where we are today?
So I think we have to go back to COVID times,
okay,
where we had significant quantitative easing with very low interest rates. On top of that, we had a lot of money that were floating around, and that ended up being the perfect storm. Lots of liquidity in the market, low interest rates.
Yeah.
One thing led to another. Actually, as a matter of fact, during that time, the early part of COVID, the completions of new construction condos were on the low side as well.
Okay.
For what we needed, and that's what started this whole madness.
Absolutely. So you mentioned completion. So Sarah, when you're looking back at your business as well, starting back in the early 2010s, call it, right? The early teens in the 2000s, and the volume of sales that we saw there. Did you see in relation to deliveries, was it the deliveries back then a little more consistent to what we see now, or with large numbers of 20, 30,000 deliveries?
Yeah, I think when you take everything into account, so first, like how Emil was saying, there was the interest rate shock. So we went from 0.25% in early 2022 to 5% in 2023.
Yes.
And all these pre-construction buyers were, essentially banking on the fact that interest rates were going to stay low forever, I guess, for their pre-construction closings to, cash flow and carry themselves and so forth. So when that didn't happen, that immediately took the math out of the equation, first of all. Second of all, the completions that we're talking about in COVID, we had 90 launches, whereas in a normal year, we have 60. So what ended up happening was, because of the sales that we did over COVID, in 2024 and 2025, we had, 30,000 completions, both of those years. We have 21,000 completions this year, and all that inventory still needs time to get absorbed. And then we also have the policy and macro overlay. So we had the foreign buyer ban. We had two layers of speculation tax. Immigration, as of 2024, has started to slow down. And then we have tariff uncertainty and so forth. So none of those things individually would have made a difference. But when you collaborate them all together, that's when it caused a complete downside into people wanting to even be close to pre-construction anymore. And pre-construction drove 50% of our condo sales. So those investors are now gone. So it's really hurting the market.
Absolutely. So to talk about that, Sehr brought up tariffs and all those things that I guess a lot of our local and federal governments implemented, all these things to really take, I guess, to really put water on that fire that was the new construction market. How do you see that? Was that really the icing on the cake, so to speak, that really stopped everything for us?
Yes, and Emil and Sehr, they both made very valuable and reasonable comments on it.
Yes.
I do see one more thing besides what they've mentioning is the methodology and the logic behind resale market and pre-construction market.
Okay.
For resale market, the elasticity is actually bigger. So the buyers and sellers, they can drop price by 20%, 30%. But a lot of the sellers, they still make a lot of money, right?
Okay.
But in the pre-construction market, back to 2021 and back to 2022, that's the time all the number works so well. that all the developers, they just want to launch, because they just want that 15% profit margin.
Yes.
Right? They calculate their land costs, their construction costs, their fees towards government. Boom, this works so well. I want to start 10 projects, 20 projects to make a huge amount of money. But when it comes to today, those lands were purchased by the developers, were already locked in. They bought for too high, like 5 years ago.
Yeah.
And development charge has been reduced. I know we are going to mention that further reduction of development charge and HST reduced, but those fees were quite high last year and the year before.
Yes.
And construction cost also goes up. So the margin has been completely digested by the overall factor, the cost and the resale market, because resale market dropped by 25-30% already. So all of a sudden, developers can no longer make the profit they wanted to make like 5 years ago.
Yes.
So they're not the stupid people. They're actually the most smartest people in the overall market. They do their math like this, and they know the math doesn't work. So the best thing I can do is to stop launching, because if I don't launch, I lose $5 million a year on each project for financing, carrying costs. But if I launch it, I lose 15 million immediately.
Yes.
Nobody will do that. So that's the logic behind it, because the inelastic methodology of pre-construction developers, behind the logic, they can deliver new products. Now they cannot. So that's why all of a sudden the pre-construction new delivery is shut down, like almost completely.
And we're going to touch on that a little later on in our conversation about the effects of completely stopping construction, because there hasn't been one high-rise launch in the last quarter of 2020, so the first quarter of 2026. And so we'll touch on that in a few minutes. So Norman brought up some great points now with, developers pausing. When do you see the investors kind of taking a hard look at back? Like, are there opportunities now? Like, what investor, if there are investors out there, and there are, what should they be looking for right now in today's market? So
that's such a good question. What led us here, I believe, I'm a strong believer in this, is really pretend investors. The ones that think they're investors, but they're not, because they're buying for flipping in a year or two. That's not how you invest in real estate. In real estate, you get in, you do the math properly compared to what your costs are, what the rent is, and you hold for the long term, right?
Yes.
We don't know how real estate will behave in the short term. So if you're jumping in with the idea of flipping quickly and you want to get out, let's say within a year or two, then you can afford to buy five units with no intention of ever closing on them. No. So that's what drove the market up. Those people are out, and they're really suffering right now, unfortunately. The smart money, I think, is in.
Okay.
The smart money is in. I see funds all the time that are looking to grab bulk units from developers, generally sending inventory or units that were not closed by the previous purchasers. So you have many developments out there that have completed construction, and the developers are stuck with 50, 60 units, sometimes even more, that they need to sell. So these funds are coming in. They're grabbing a fantastic deal per square foot, and they're in for the long run. They're in for 10 years plus. So that money is definitely in. As we know, you buy when there's blood on the street, and you sell when the opposite happens, right? But unfortunately, that's not what no matter how much we tell to our clients, it's very few that follow that advice. So you get this euphoria in good times, and everybody buys no matter where the project is located and how no matter how high the price is. And now that they should be buying, they don't. It's really strange.
Yeah,
I'm buying.
Yeah, there's opportunities out there. Interesting.
Absolutely.
So here with your clients and your investor clients as well, where are you seeing the opportunities in the market that we're in right now?
I mean, I think the opportunities right now are great, but like Emil was saying, the problem was people overextended themselves, I would say, in COVID. So I have investors who bought like 8, 9, 10 units when they shouldn't have been. They should have been probably buying 1 or 2.
Okay.
So even though now it's a good opportunity, the problem is they still have to close on all that inventory. It's not going to cash flow, so they have to account for that. So it's really leaving them in this deficit where they want to jump in, but they're not able to because they still have to deal with the aftermath of the last 4 years.
That's a good one too. There is talk in the marketplace of clients, buyers, investors not closing, but it's great to your clients. Obviously, your investor clients are closing. They have that long-term vision that Emil was talking about as well. They're going to close and ride the wave out.
Yeah, because I mean, what we were seeing in COVID was everybody was building micro units, studios, small one bedrooms.
Yes.
And then, like he was saying, they were just speculating that, hey, in 5 years, someone is going to pay more than what I paid. That's not investing. It was like a Ponzi scheme.
Yes.
So now it's all come crashing down.
Yeah.
And, you know, the real value I see now is in, you know, family size units, 2 bedrooms, 3 bedrooms, boutique buildings. I think that's where the opportunity really lies, where that's where end users are going to gravitate to. I still think it's going to take some time for investors to come back into the market and, you know, make a difference.
So Norman, recent news in the last few weeks, there was the HST announcement. How are your clients, or how are you educating your clients on leveraging that opportunity?
Yeah. So the first thing is that the HST rebate and the development charge reduction, both policies together can let a pre-construction unit to be 200K maximum cheaper than it was before.
Okay.
So that's a huge discount. So what I've seen immediately after this policy was launched is that I see a big shift from resale market to somewhere. Okay. So I think a group of the people who used to be ready to buy a resale unit,
Yes.
now they decide to look at pre-construction because those units are cheaper now.
Okay.
It's like you spend a similar amount of money, you would rather buy a new car instead of a car that's drove for 20,000 kilometers. Yeah, something like that.
Yeah.
So that's the first group of people that was dragged from the resale market. The second group of people that I believe that's dragged from the resale market is the people who are very ready to buy something, but now they doubt because they figure out that, am I buying for too much a high price? Because right now, one of the products dropped so much in their price. And I think resale market should drop similarly as well because of that trend. So now I used to be ready to buy something resale. Now I think I should rethink about it, consider it a bit longer and watch it a little longer. So now I see 2 groups of people, which are considerable amounts of those people are dragged away from the resale market. And of course, part of them will join the pre-construction market. You know, it used to be the case that a lot of sales office, they're empty, completely empty, and they are by appointments only. Now I see projects like Union Glen, things like that. Their parking spots are full. People park on street. You know, that happens again. That means the number does make a difference, especially for those suburban area. I think for downtown core condos, the number is still getting there, but not there yet because the condos price difference like 25-30% before. Now it's become like 10 to 15%, but it's still considerably more expensive. But for some projects, price marked at 1 million or just over or just under, you can pretty much get most of that 200K back. The price starts to make some sense. That's those new projects at the edge of the suburban area are now being more attractive than those just inside of the edge and which are resale like 20, 30 years old.
Oh, I see.
So I do see a lot of people when they buy their first home, they want to move in, they start to consider new projects. Just like the logic, they want to buy a new car instead of use the car.
Yeah.
If the price is the same.
If the price is the same.
Or similar.
Sarah, how are you edging your clients to take advantage of this whole HST?
Yeah, for sure. So the last 4 launches that I've been involved in the last 2 months have been very successful, sold out very fast. And same thing, it's been a lot of end users purchasing versus
Is it low-rise
investors.
product, high-rise product?
Low-rise product. All end users, I would say, over 90% end users, and they want to take advantage of the fact that there's 11 months left in this in this rebate program, and it's a massive discount. It's also a lot of people who weren't able to purchase to now maybe be able to purchase or to go into a slightly more expensive price range than they would initially be able to. So I think that time crunch on the fact that the rebate's only available for the next 1 year is motivated people to come into the market, and that's why we're seeing these launches. Like he was saying, Union Glen and there's 4 or 5 others I can name that have been extremely successful with people actually even lining up overnight to get a unit. So
that's exciting.
Yeah, it's exciting to see that first time in 2 years.
Yeah, that's right. We had a really nice flashback of 2021 level.
That's right. Well, on the low rise.
On the low rise.
So
these are, as Sarah mentioned, these are end users. I haven't seen any investor.
No.
Yeah, because of the time frame. So like when you
type as well.
When you think of the condo market, they're still years and years away. So it's still more geared towards investors, whereas the end user product, some of it is ready as soon as spring of next year. So
would you see, and I'll put this to the group, with this HST rebate, my opinion is, and I think it's the market's opinion, that it's leaning towards really that product that can be built like a home that's really constructed in about 6 to 8 months. Or do you see any of the standing inventory in the high rise? Are any of your clients calling, asking you questions, say, hey, should we take a, with this HST rebate, where are the prices landing on some of this high rise stuff?
So ultimately the HST rebate and the reduction in levies, what that does is it helps the developers manage to find the equilibrium of the price point, which is now obviously clearly a lot lower.
Yeah.
So that's what that does. It has. Well, I have 16 listings on a condo at Behaviour and Shepherd, and it has helped. The developer is taking that 100% off the price because we need to lower them to a level that they are sellable. That difference between the pre-construction price and the resale price, it's a lot larger in condos, unfortunately. So now we're at essentially a resale condo price level, which is more sellable. As Norman said, why buy old when you can buy new for the same price? That's right.
And would you say it's a supply and demand issue right now? There's just such a grand supply of condos.
Yeah, so we have to go through that.
We talk a lot about this figure here, come 2029. Urbanation is the big think tank of all things real estate here in the GTA. They've done the research. They're suggesting that come 2029, the end of that year will only deliver approximately 2,000 condominium units, where on average we land in around 15,000 units a year. So how do you see that affect our market going forward, Norman?
Yeah, I think it's basically a mismatch of supply and demand.
Yeah.
Right now we have a oversupply, but it's very short term. Right, you have a lot of units being delivered, and some of them are not observed because the buyer cannot close it. The developer has to collect those back. But that's because in 2019 to 2021, we sold a tremendous amount of condo pre-construction units. So this is like, you need to have a baby to have a teenager, then to have a graduate students, right?
Yes.
It takes time to nurture this. So. It's the same logic now. For the past 2-3 years, we didn't sell any, not any, like virtually.
Amount,
We don't sell a lot of condominiums. We sell very little of them. So that means later on in 3 to 5 years, maybe 6 years, it will be the reverse situation like today. Maybe by that time, we will go back to a stage that we sell a lot of pre-construction in 2029, 2030.
Yeah.
So that 5 years later, we have a lot of supply. But now it's the situation when we have a lot of supply coming from 5 years ago, but now we are not selling. And then later on, 5 years later, we don't have anything. So that's a tragedy, actually, for both developer and investors, because that makes the market fluctuate. It's not very healthy. And it's unfortunate that we don't have a good strategy to change this, because developer has to make sense when they launch the project. That's also one thing that I think probably low-rise can launch. They have to be able to build in 6 to 8 months.
Yes.
So that all of their sales falls into the discount period.
Yes, the HST rebate.
Yeah, but for any high-rise, if you are selling this for 2 years and 3 years, you're going to
anything new. So no, you're not going to qualify for the HST rebate.
You're going to increase the price by 10%, 15% later on. It doesn't make any sense. So I think the policy is mainly for inventories of high-rise, but it does help some of the launch of the new low-rise projects.
Hopefully it gets extended.
Yeah. So one thing that's in talks right now, we're beginning to think about it anyways, was the foreign buyer ban our federal government put in place when the market was hot. Like it was, people were, again, sleeping out overnight. We're seeing that a little bit now. Do you see or think that, with it expiring January 1, 2027, we're about 8 months away, what are the options? Should they continue it to keep the market insular? Or do you open it up and allow it for, they call it the Australian method, where in Australia they allow foreign buyers to purchase new construction? Or do you just open it up to a free marketing end?
I mean, foreign buyers contributed 3 to 5% of sales. So it wasn't a massive amount. I think in Toronto it's about 4%. But it does definitely help with sentiment, because right now the message is that Canada is not a welcoming jurisdiction, which is I think a little bit important.
Yes.
And, they've been studying the Australian method, like you said. And I think what the Carney government wants to do is essentially maybe allow the foreign buyers to purchase new construction, but limit them from buying existing resale. Okay. So that way they're still supplying inventory, but not taking away or competing with existing stock. So that might be a good hybrid of how to go about it.
Yeah.
But there's been a study in New Zealand, which has had the foreign buyer ban since 2018, and they have not seen a significant price impact.
Oh, really? Interesting.
So because the amount is not that high.
No.
Most of the foreign buyers are either buying luxury product to live in themselves, or it was fueling some pre-construction sales.
Yeah.
So
it wasn't a huge piece of the pie, so to speak, that caused that.
Right.
The interest.
It's more of, I don't think that it was a foreign buyer problem. This was basically like.
It's a political problem.
Yeah.
Unfortunately. It's to score points. I could argue that if you really want to score points with the people that really understand the market, you need to do exactly the opposite. You need to allow foreign buyers, you need to allow foreign investors to come in so that you can enable this construction to happen, to deliver more units for your citizens. Ultimately, that foreign buyer will have that unit as a rental unit, right? We need that desperately here. So
that's great.
I have one more thing to add.
Absolutely.
Yeah. So it actually affected me a lot. I used to be an immigrant to Canada.
Sure.
And a lot of my clients, they have similar background. I bought 2 condo units when I first came to Canada. That was in 2010 and 2011. And by collecting the rent and paid off the mortgage and everything, and sale after I graduated, I paid off my international tuition fee. So I think by that time I provided supplies to my friends, to my colleagues. So foreign buyers are not necessarily a bad thing for the market. And at the same time, I think, it's just my opinion, okay, it doesn't represent anybody else. I'm actually against this policy from day one. I think it's a very bad policy because it kills supply. There's a continuous supply of a homes issue in a country like Canada. We want new homes. So anything that support more supply, I'm always with it. Anything against more supply, I'm always against it as well. So when we have the foreign buyer ban, I think we definitely want something in a more soft way, like what Australia did, that we still allow foreign buyers to still contribute to have more supplies. At the same time, let's like our own citizens to buy resale homes. That could make the market healthier. Okay. And the other thing is that no matter whether it's a political reason or it's a market reason, we're punishing one group of the people. That reminds me one slang in my culture, is that there are 10 birds in a tree. When you shoot and kill one of them, how many birds are left?
Or 9.
No, because all the birds are scared.
They all fly away.
Right? That's the bad effect of this policy. Because if the government punish one group of people, saying that, hey, you guys are no longer welcome to buy here, then the other people will think, okay, the market lose some buyers, so the market will go down, so I should stop buy as well. I should buy less. Okay, so that's why I think that doesn't only punish 3 to 5% of the groups of people, but it also negatively affected all the 95% of the rest, because they will buy less, because they know one important buyer group is now disappearing.
Yeah, there's less pressure to buy.
Exactly.
There's less motivation.
Exactly. And because it kills supply, I'm always against this policy.
Yeah, like Urban Nation, they had a report saying that we need 235,000 homes by 2035, and we're on scale to build, I think, 111,000. So there's still going to be a deficit of like 121,000, which is a lot. Supply that we still need.
Absolutely. It's very interesting you say that. So you figure the initial idea of limiting foreign investment was to limit the growth of pricing, because pricing there's thought was way out of whack. Prices were, escalating, and obviously they were able to do other things with the foreign buyer ban. Obviously, you had to qualify for a certain level of mortgage payment. All these things, that restrictions they put in place, cooled things off very, very quickly. And here we are today. And so the talk is now, and the feeling is, and Norman bring up a great point. How do we put a little fuel on that fire again to get it going? So very interesting. Thanks for sharing that. So start to wind things down here in our talk. So what's your feeling now? Emil, we'll start back at you. As we look back at where we are today, at this period in time, is there a missed opportunity for investors, or was this a necessary reset?
Well, the missed opportunities for the ones that have sort of a short-term view and are treating this again as a gamble. If you treat it as an investment, I think it's a golden opportunity. If you have the funds, if you're liquid, and if you're doing the math properly, then absolutely you should go in. I think we will not see this kind of prices ever again. Could they go down for the next year because there's more supply coming in? Sure. But at the end of the day, you're buying, how many can you buy? You're not buying 100, 200, right? You're buying just a few. So find the right one, negotiate hard, get one that you can keep for the next 10 plus years, and you'll be fine.
So the idea of long-term investment, a long-term vision.
Absolutely, and I think it's a fantastic time to buy.
Absolutely.
Yeah, real estate is, decade trading. It's not day trading. So if you're going to be buying, saying that, hey, in 12 months I need to get out and make 100K, then you probably shouldn't be purchasing.
No.
But if you can say, hey, can you hold on for 5 to 7 years and keep this longer term, then definitely.
I love what you said there. Decade trading, not day trading.
Right.
That's awesome. No, very cool.
Try Bitcoin for day trading.
Yeah. Bitcoin. Yeah, we'll stay away. That's a whole other discussion.
Yeah.
Norman, as we wrap up, in terms of advising clients, what's your signature move, call it right now, when it comes to buying and investing in Toronto's real estate market?
The signature move is to work with Signature Family.
I love that.
That's a joke. That's a joke.
I love it.
Yeah, so I think there are two things that I want to explain here.
Sure.
The number one is that when the market is not that active, or is not the way you want it to be, like a 10% increase every year, when it's in the slow market, try to play with cash flow instead of appreciation.
Yeah.
Because when the cash flow works, it will always be a good investment, no matter what the market is, no matter when it is. Okay, so if the cash flow ever works, go with it.
And cash flow is back.
Yeah, cash flow is back.
It's great.
For certain projects, the cash flow start to make sense. Like
Okay.
you have even positive cash flow.
Okay.
The second thing is that for a niche market, I think you can still find very, very good deals. I even call it steal. That's the assignment market.
Okay.
Because there are people who bought it for too high long time ago, can no longer qualify for a mortgage, but they have TFSA, they have RSP, they have their principal resident, they have a job, they cannot go bankruptcy, okay? So what they do is that they significantly drop the price they're offering. I've even seen a lot of them not at the resale price, but lower than resale price right now in today's market.
Sure.
And those have very good cash flows, but you just need to find the right person to help you to find the right product. It takes a lot of time to find those products, but they exist. So besides the new pre-construction directly, you're kind of buying the inventory, but not from the developer's hand, but from another original buyer's hand. And those are gold mines. Just try your best.
All right. I love it. Any last points there you'd like to share about real opportunities in today's market? I know, again, our friends in Urban Nation have reported that there's a lot of the smaller units are in really high demand right now. We're talking about cash flow. What are you seeing on that front as well? With your
listen, the developer promotions being offered right now are the best that I've seen in 13 years. So, we're as pre-construction agents, we also know the actual prices that has gone down 20%. There's still room on that for us to negotiate even further. So if you take those discounts, add on the HST rebates and, all the incentives that are being offered, it's actually the best time to purchase.
Interesting. There's some opportunity. Anything else you'd like to share, Emil, before we wrap up?
Yeah, absolutely. Resale or assignment I find they're quite interesting. If we're talking condos, houses, townhouses, generally pre-construction seems to be better these days.
Yes, with the HST
because of the HST reduction, and as builders are a little bit more open to negotiations. But yeah, no, absolutely, great deals in assignments, great deals in resale condos as well from sellers that are stuck, that are over leveraged.
I love it. Well, again, Sehr, to steal your line there, I think it was so great. We're in the decade trading business, not the day trading business. So a lot of great information today. Thank you all for your time. This is amazing. Your input is literally priceless. There's so much opportunity right now. It's just, again, garnering that information that you shared with all of us today and put it into action. So thank you very much for all your time today, and
Thanks,
look forward to the next time. Thanks, guys.
Appreciate it.